Hello, welcome to this Midweek Market Outlook webinar. I'm Devarsh. I'm joined by my colleague Nagaraj. Hi Nagaraj.
Hi, welcome to Midweek Market Outlook webinar.
Right, today is a very important session. We are at the end of the almost at the end of the February month. Tomorrow we have the derivative expiry, and from next month we will have the March end. A lot of people who would have made some money over the month will have tax consideration to look after. Let's first discuss about the international market. So, what has happened in the US is that till now, the expectation was that the interest rates will be cut by June, but the expectation has now been belied. The probability of the reduction in interest rate is coming down day by day, and now market believes the interest rate cut is not going to be that soon, so interest rates are going to remain higher for longer. So that has implications on the valuation fronts. Second, what we are seeing is that after many months of upturn, there are early signs of a market correction setting in. As I mentioned, usually the month of March is notorious for profit booking, and after 15th of March, many HNIs and large investors do take out money for tax consideration. So, and we have seen a tremendous run in SME stocks. Many mid cap and small cap stocks have gone much beyond their recent fundamentals demand. So it is better to remain a little cautious there. And if you have leverage position, if you are carrying a very large book on leverage, it is advisable that you reduce your leverage now. If you were to panic after say certain percentage of fall, it is advisable to panic early, reduce the position, make it light, so that if there is any correction, you can actually weather that downturn. Now, where are the important supports? How far markets are likely to fall? Let's hear it from Nagaraj. Over to you, Nagaraj.
Okay, thank you, Devarsh. Is my screen visible?
Yes, your screen is visible. You can go ahead.
Okay. Hi, friends. Today we'll discuss about the market movement and how the market has moved. And this is a intraday time frame chart, a 60-minute chart. What we can observe over here is after showing a range bound action over the last three sessions, in fact, Nifty has slipped into decline. The sharp fall has been witnessed, and in between there was a minor pullback rally in the second half, and the market failed to sustain the pullback rally and finally closed near the lows. So friends, this is a daily time frame chart. What we can observe on the daily chart is continuous formation of higher tops and higher bottom. Since then, market has been continuous in a continuous uptrend. We have seen market showing reversal at the higher levels. At the same time, market has witnessed upside bounces from the lower levels. What we can observe over the last 1 or 2 months is the market is forming the higher new highs at we have seen at 22,125, 22,126, after that 22,250 and 22,297. In the 3-4 occasions, whenever the market has formed a new all-time high, has failed to sustain the all-time high immediately after the formation and slipped into a gradual downward correction. This itself is indicating that there is a strong resistance around 22,200 to 300 levels, despite having moved towards that new all-time highs, market failing to sustain the highs and showing the correction from the higher levels. At the same time, lower levels, we have seen rising lows, we have seen higher bottom formations. Market has formed, even though despite falling around 200, 250 points in the past, market has witnessed upside bounces from the lower levels. Now the question is whether that similar pattern is going to happen from here also. The overall chart pattern at the 200, 22, 200, 300 is very strong resistance, no doubt about that. The reaction of today's market reaction means today's fall is indicating a bearish engulfing, and it is indicating a negative bias. Immediately we have a support around 22,850, 22,800, sorry, 21,850, 21,800 levels. It seems that either whether it is a doubtful, we are going to hold on that support, or we are going to come below this support, because and previously also we have seen whenever market has declined in one day, that immediately in the next day market opens at the lower levels, and we have seen the upside bounces in the last 1 or 2 months. Now the immediate support would be around 21,850, 800 levels, and once this support breaks, then we could see multiple supports at the lower levels, which is the weekly time frame. This is the weekly time frame. At the multiple support in the sense is the 10-week EMA. We can see this yellow color line, which is connecting the recent weeks lows in the last 1 or 2 months. We have seen many number of times that market has read down to this 10-week EMA support and bounce back. This is going to be a very important support at the lower levels. Once the support of 21,800, 850 gets broken on the lower side, we are likely to see the good support coming in around 21,700, 21,680 levels. So we have to be cautious at the higher levels, as there is a strong resistance. Market is coming down and showing some high volatility at the higher levels. At the same time, we are optimistic at the lower levels that we could see that around, if the 800 is broken, 21,800 is broken, we expect that 21,700, 680 level is going to offer the support, which is a 10-week EMA, and we could move up. On the weekly time frame chart, friends, still there is no reversal kind of a pattern unfolding at the higher levels, though market has moved up. The market has reacted from the higher levels. If you look at the chart of last 6 to 8 months, the market has been continuously moving up. We have seen some reversal sharp knee-jerk actions from the higher levels in the past also, but at the lower levels, this supports have offered bounces for the market, and market continued to move up since then. So till the market Nifty reaching towards the support, till the Nifty violating the important supports, will be continue the near uptrend remains intact as per the near term, but the short term reversal is noticeable, and we are likely to see some more correction at the lower levels. On the monthly time frame, friends, the trend remains intact. We have seen a significant upside breakout of the resistance around 20,500 odd levels in the month of December. In January and February so far, market has been consolidating at the higher levels, and the 22,200, 22,300 has been a strong resistance. So on the Nifty front, short-term reversal has taken place, and the long-term trend, medium-term trend remains intact for the Nifty. So we expect Nifty to take a support around 21,700, 21,680 levels. If it breaks below 21,800, 850 levels in the next few sessions. Friends, we'll see how the broader markets are working out. The broader markets like mid-cap, this is the mid-cap chart. Mid-cap, since last 3-4 months, we have seen a significant up move in the mid-caps. It has moved up as per the higher tops and bottoms, as per the weekly and daily time frame charts. This is a daily time frame. What we can observe over here, in the previously on the 3-4 occasions, we could see if the small cap and mid cap shows the upside bounces from the immediate support. Immediate support for the small cap is around 15,300 levels. So that is going to be important from here on. So that's all from my side. Now I'll hand over to Mr. Devarsh.
Okay, Nagaraj. Now, today we'll keep more time for the questions. As markets have corrected, there will be, I'm assuming there will be a lot of questions which needs to be answered. So, depending upon the screen you are using, you will see the window where you can put in your questions. Nagaraj, from the technical charts perspective, is there any sector which is looking particularly weak, which we need to keep in mind on?
Yes, Yash bhai, there are so many sectors looking weak, especially if you look at the other broader market sector like mid cap and small cap are looking weak. Metal, media, energy, and even FMCG sectors are also looking weak on the chartically. But on the other front, IT is the one which is so far resilient with this decline, is holding at the higher levels. Apart from IT, there are certain sectors that which are showing on technically showing a buy on dips kind of a pattern, which are PSC, you can say PSU, and realty, automobile, healthcare. Healthcare, we have seen some sharp momentum today, though declined from the higher levels, but placed at the support.
Okay. So if you have any questions, you can type in your questions and we'll try to answer them. The summary is that we are near the technical supports, and in the past, whenever we have seen some downturn, markets have found support and they have bounced back. This time also, we are closer to the important supports, as Nagaraj has pointed out. Only if those supports are broken, then we have to worry about the situation. Indices are more or less strong. What I am worried about this time is that the mid cap, small cap, and some of the SME stocks may not find support so soon. So that's where we are turning little cautious and asking investors to reduce exposure and improve the quality and the market cap of your portfolio. Try to increase exposure towards from smaller and mid cap to larger cap stocks. Larger cap stocks, large cap stocks, index stocks do look attractive compared to smaller stocks. Okay. I can't see any questions coming to my screen. Can you see any questions, Nagra? I think
No,
that
right now I haven't seen.
technology issue is there. So I think we will not be able to. So now questions are coming. Currency, currency question is there. So RBI has kept a very tight leash on INR till May, June. It is likely to remain little subdued. From June, it is expected that a lot of money will come into the Indian market and that should result into some kind of appreciation. So right now, the outlook towards INR for longer term is bullish. For next 2 weeks, it is going to be range bound. Okay. There is also one more exam going on. Somebody informed me, so that's why many relationship managers are busy with the exam. So we'll cut short this webinar today. If you have any questions, you can always connect us through your relationship manager or through our research WhatsApp group. Thank you all for joining and have a nice day. Thank you, Nagaraj.
Thank you.